Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for June 21st, 2018. So we have kind of a confusing market here, a little bit confusing anyway. We've got the big international companies out of the diamonds struggling to hold up while other indexes are soaring to new highs. So let's take a look at what's going on. The Dow ended the day yesterday just kind of teetering right there on the 50-day moving average. But you can see this morning, at least at the moment, we are looking to gap down, with the Dow gapping below the 50-day moving average, which is unfortunate. And as you can see, now you could draw this trend line in a lot of different ways. But the way I've got this trend line drawn, we have now failed through the trend line, and today would be a follow-through to the downside, confirming a failure of that trend. So we have the Dow looking potentially south, while at the same time we have the Qs stretching out to new highs and looking strong. Now, this morning, the futures are pointing to a little bit of a gap down, and you can see that's also affecting the Qs. We're moving just slightly lower down this morning. IWM also reaching out, gapping up to new highs and staying strong all day long. IWM is actually looking for a higher open at the moment. Remarkable, showing some strength here in those small caps. And the SPY itself did a really good job of hanging on yesterday, managed to hold on to positive numbers, but just barely kind of held on to that gap, a little bit of the gap yesterday. But what's nice is it's holding above a support level. And as long as we can hold above that support level, we're looking pretty good in the SPY. We're holding up here and we're holding above the trend. So far, so good. We're also holding above the 50-day moving average here. Now, yesterday in the Dow, I made warning of the potential of a pop and drop. And that's exactly what we ended up getting here in the Dow, to be careful not to chase in. And that turned out to be pretty close to right, except you know, unless you're in all tech stocks or small caps, you did really, really well yesterday. So this morning with the gap down, now we have to be just as cautious of those gap downs. When we have this contradiction, we could gap down if you were to chase the short and just certain that the market will fall from here. We could very easily rally from here. So it's a challenging market, to be sure. What you might want to do is stick with those domestic companies, focus in the tech area, that kind of thing. You might want to avoid the chip sector, though, because the chips seem to be getting well, a little bit of uncertainty there with the trade issues going on. So as we approach this open this morning, a little bit of caution. Now, I also want to point out that we are approaching a weekend, and as we move toward that weekend, I'm a little bit concerned what could happen over the weekend. So for me, my plan is I plan to lighten up my risk. I plan to be looking to take some profits and tuck some of that money away so that I'm not taking as much risk as we move into the weekend and the uncertainty of what could happen. Now, I don't know if the rest of the market is feeling that way, and I'm certainly not going to suggest that I'm correct. But I do know that I will enjoy my weekend a lot better and sleep a lot better if I know my money is protected. And I just Tuesday proved that we have the potential for really big moves in the market as fear creeps in. So we'll want to have a plan to protect yourself. And the only way I know to protect myself of that kind of thing is either to have, particularly with options, be flat the market with very little delta risk, or to reduce my overall risk to the market from the beginning, and that is reducing the number of trades that I hold as we head into the weekend. Let's take a look at the VIX. I think this is interesting that even though we are showing this kind of drastic difference between like the NASDAQ and the Dow, we're not really registering any fear in the VIX. And I'm beginning to wonder if this is a little bit of a complacency problem that we might have. Everyone just kind of tucking their head in the sand. We're so tired of the political uncertainty and the spin coming out of that maybe we're just starting to ignore it a little bit too much, and that can cause some problems as well. Complacency can be a real big issue in the market, so be careful with that. Don't become complacent. Just remember that anything is possible around this. The market has proven already it can gap 300 points. Don't forget that, and make sure that you're protecting your capital. We don't want to wake up on Monday morning having a huge amount of risk in seeing the market taking a big move south where there's nothing you can do about it. So I would rather take the risk of missing out on a resolution of the trade negotiations in the market rallying. I can always easily get into a rally late. It's hard to get out when it's too late. So keep that in mind when you're planning ahead for your weekend. Let's take a look at T21.22. T21.22, 4-week new high, new low ratio. You can see we pushed back up yesterday with the Qs pushing higher, the IWM pushing higher, the SPY holding up. We rallied back up. So we're up here toward that bearish reversal zone, but we still have plenty of room to the upside on that if we can find the inspiration, if the bulls find the inspiration to really rally. So you might want to think about that as you plan your day as well. So with that, hey, let's take a look at that economic calendar day. We have a really full economic calendar today, but only a couple things expected to move the market around. We have jobless claims right here at 8:30 this morning, and the Philly Fed survey. Jobless claims are, continuing to remain very strong, even though it's expected that they're going to tick up just a little bit this week. And the Philly Fed is looking for a little bit of a pullback after its 45-year high number from last month. So a little bit of pullback, a little bit of cooling there would actually help some of the pressure on manufacturing. We have a Fed speaker today at 9, and we have a few other reports in here, a bunch of bond things, but nothing else expected to really move the market today. So watch that 8:30 a.m. Eastern time for those reports. If we take a look at the earnings calendar, we have about 19 companies reporting earnings today, and we've got Kroger and Darden reporting this morning. This afternoon, Red Hat would probably be one of those companies you'd want to keep an eye on for their earnings reports. With that, everyone, hey, I want to wish you all a fantastic day. And I want to let everyone know that I'm taking a rare day off. So tomorrow, Friday, there will not be a morning prep video. I apologize about that. Taking the day off, celebrating a birthday. So everyone, I want to wish you all a fantastic day and even a better weekend. Take care of yourselves. Protect those gains, protect those profits. Be careful how you plan this weekend with that uncertainty out there. And work to take some of those profits and protect some of that capital. Everyone, take care. We'll talk to you all very soon. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons, drop a comment, and always feel free to share this video with any friends and family. Have a great one. We'll see you bright and early Monday morning, everyone. Take care.